All right, so how do we trade trending and ranging markets? I'm going to walk you through numerous of setups so you can spot when you're in a range and when you're in a trend, okay? So, so ranging markets. What we need is at least 3 connections at the extremes to consider it a range. What is the extremes, okay? The extremes are the lows of the range and the highs of the range. You see how it's boxed in between these two ranges right here? These are the extremes, okay? So let that be known. Now, we have it coming down, right? It breaks up. These are 2 connections. 1 connection, 2 connection. Now we have a connection down here. That's 3. Now we don't take the 3rd one. We just need a 3rd one, okay? So after we see that, okay, we got, let me draw this. So we got, boom, okay? So we got 1, 2, 3. Once we got that 3rd one, now we can consider taking trades at the extremes, okay? So what do we have here? It comes back to the low, right? And as it comes back to the low, what do we get? We get a smart money. We get a smart money manipulation candle, right? It breaks below the red candle, then shoots back up. We'll be getting in as soon as it shoots back up. Okay, it stops somebody out. Now, I know what I said about having high risk to rewards with smart money setups, but since we are in a range, we only aim for 1-to-1 in ranges. Okay, we're gonna have to play it safe. We only aim for 1-to-1 risk to reward in ranges. So write that down. Okay, so this is our stop loss, and we're aiming for 1-to-1. No matter what, I don't care. I don't care. 1-to-1. Okay, got your profits. Boom. Okay, now it comes up to the high, the extreme highs. What do we get? We get a momentum bar, kind of an exhaustion bar, not really, but we get a wick. That's a rejection wick. So the next candle, we get a red candle. As it breaks below that red candle, we'll be getting in. We'll be getting in. Stop loss is above that wick, and we'll be aiming for a 1-to-1. We got it, and we're done for the day, okay? I only recommend trading the range twice, no more, okay? No more. Ranges is not built to constantly keep trading, okay? So trade it, take 2 trades maximum, be done with the pair, or be done for the day, okay? Let's go to some more setups, okay? All right, so this setup is a reversal, okay? So we see that the market is pushing down extremely hard, okay? Like this is like abnormal extreme. So once we see that the market is pushing down too hard, expect for a reversal. So as it starts to shoot up, buying power in the market starts to come in, we'll drop our demand, as we should. And did it ever come back to demand? No, it didn't. It did not. So we have a green candle, we have a minor pullback. Remember, it only takes 2 candles to draw supply and demand. So that red pullback, and then we have a massive green candle. What is that? That's more buying power. So there was more orders placed right here that they was not done in the market. So as it comes back, we would have our demand area drawn up to take this long right there. As soon as it break above that green candle, we're getting in. Stop losses underneath that red candle, and we aim for our 1-to-1. And if you want to leave a runner, you can, but make sure you take some profits off once it reach 1-to-1. Never just go for 1-to-2 or 1-to-3 without taking something off. Take 20% off, 10% off, something, okay? Or you can do this. Move your stop loss to break even, okay? If you really want to get that 1-to-3, 1-to-2 risk reward without closing no profits, move your stop loss to break even. So you can be in a risk-free trade. Okay, and obviously we get another demand area because look what happened when it came back. It's just like clockwork. It just keep happening over and over, and people don't see it. And I'm still on the 5-minute chart. So it came back, and it can't close past, and we enter for the buy. Y'all know how this go. Okay. All right, so let's go to the next setup. Okay, this is another reversal setup. Okay, So the market was kind of ranging a little bit. Okay, it pushed down really hard. Sellers are in the market, but then look what we get. Look what we get. We get a wipeout bar. Now this is a reversal pattern. Okay, so once we see this, we should be getting in for the buy. Okay, we should be getting in for the buy right here and aiming for a 1-to-1. Okay, now if you're not so sure about getting in right here, just wait. Just wait. Setups are going to happen, but that is a reversal wipeout bar. Once you see a big red candle and a big green candle come right after it, it's going to push up. Okay, now we did get a demand situation right here, so we get buying power. It comes back. We have our support marked up and our demand, so whichever one gets rejected, we're ready for it. Okay, so it pushes down. It does not break above candles, it just keep going low. Once it break above this candle right here, we're getting in. We're getting in for the buy. Now sometimes you're going to get stopped out. I'm not going to sit up here and act like you're not going to get stopped out. Some situations you're going to get stopped out, and then it's going to throw you another setup right after to get in. Okay, right after it. So don't feel defeated when you get stopped out. Remember, professional traders are not afraid to take the next trade even if they get stopped out. Remember that. Okay, so breaks it below, and it stops somebody out too to go back up, and we're in the demand area. Okay, now trending markets. Okay, trending markets, very easy setups, very easy, but you have to know how long it's been trending. Okay, so it's been pushing up, right? Now we're getting massive selling power, like massive selling power. I would draw my supply up here in case it comes back, and I have my swing lows marked up in case it comes back to those areas. Okay, so where it pulls back, but where do it pull back to? It pulls back to this low, not this low, but this low. Okay, remember, on a downtrend, we're looking for swing lows. On ranges, we're looking for swing highs and swing lows, and on uptrends, we're looking for swing highs. Okay, so it pulls back to this key area right here. What do we get? We get a green bar, and then we get a red candle with a wick, and then it breaks below. As it breaks below, we're getting in. Stop loss is above that red candle, 1 pip or 1 tick above, however you want to do it, and we're looking for a 1-to-1, and then you leave the runner if you want to leave a runner. Okay, but make sure you move your stop loss to break even. Now when it comes to trending markets, the best setups is going to be the first pullback or the second pullback. Okay, the first pullback or the second pullback. This is the first pullback, so you have a high chance of leaving a good runner. When you get in, when a trend first starts and you get in at the first pullback, you will get better risk rewards. You would get 1 to 2s, 1 to 3 risk rewards. Okay, but when you're like on a third pullback of the trend, I would just go for 1-to-1 and just leave it at that. Okay, now what do we have here? This is the second pullback, and this is a supply area. We have a pullback, and then it shoots out again, and we have resistance. So once it breaks below this candle, my stop loss is up here. I aim for my 1-to-1 and leave the runner. Okay, or stop loss to break even, and then you go for your runner. But you see that it dropped down, hit your 1-to-1, and then stops you at break even. So you have to be wary of that. Okay, but definitely the first pullback or the second pullback of the trend is great. Okay, in trending markets. All right, let's keep going. All right, so we have a lot going on here. So let's start with the ranging market first. So this is a key level right here. It's a key level. So the market pushes down, pushes back up. I'm marking up that low. It pushes up here. You know, pushes up here. I'm getting in for this sell because this is just a regular support and break and retest type of entry. Now it's going up and down. Now I don't recommend to trade in the middle of the range, but this is price action and it didn't close past this low. So you could have entered right here. Okay. You see how it never closed, like the body of the candle never closed past this low? You could have entered the buy right here. But is this entry an extreme? No. Okay, so this is a risky setup, but just know that this is a setup. Okay, now it comes back to this extreme, right? When it come back to this extreme, now that's the third touch. Okay, so this is 1, 2, 3. That's the third touch. Now, anywhere it comes back to the extreme, I'm looking for trades. It comes back here, I will be getting in right here for a sell, 1-to-1 only, because we're in the range. Okay. And I mean, if you want to leave a runner, you can, but I'm playing it safe and I'm going for my 1-to-1. And then it comes back down here and it consolidates. This is ugly, you know. So let's look to when it start trending. Okay, so it pushes out really hard. Take this off. So it pushes out really hard, creating demand. I will mark up my demand zone over here, and it pulls back. Where do it pull back to? Not the demand, but we have a swing high right here. This is a swing high. So we have to be prepared for the swing high just as much as demand. So it comes back to the support, and we're getting in as soon as it breaks above this red candle. Okay, now it pushes out really fast, creating another demand. So this is another pullback. This is the second pullback. So now I will be getting in as soon as it breaks above this red candle, and this is a wipeout candle, so that's even more confirmation to get into the trade. Okay, so you'll be getting in right above here, and you'll be getting in right above that red candle. So that's 2 entries in 1. Okay, all right, so we have support right here. It pushes up. At this very moment, we don't know if this is a key level, so we just don't know. Now it comes back to that same area, but the body of the candles don't want to close past this area. So even though at that point we don't know that this is a ranging market, we will be getting in for the sell as it breaks below that green candle. Now that's just our first 2 touches. This is 1, this is 2. Now this is 3 right here. This is 3. So now since we got 3, we got our first touch, second touch, third touch. Now we know that we're in a ranging market. So what does the market do? Give us a beautiful, beautiful exhaustion bar. This is a beautiful exhaustion bar. Okay, most traders are getting scared. They're getting out of their trades. We're happy when we see these when it reach a key level. Remember, so it don't want to close past those highs. So we're getting in for the sell right there and getting our 1-to-1 risk reward. Take profit hit. Okay, so I hope that this helped you to spot ranging markets. We need 3 touches on the extremes, and for trending markets, we love the first and second pullback. Okay, it's very common sense. We still take our trades at key levels no matter what. Key levels is everything. Okay, so just like this, broke above, came back, didn't come back to the demand, but we still have a swing high right here, and we're looking at swing highs because we're pushing up, meaning that this is about to be an uptrend. Now this breaks above with momentum. Now we have buyers over here. It comes back and we get it for the buy again. So you could actually just stack these 2 orders, just left the runner for both, and you would have been good. Okay, so let's get to the next video.